Okay, so we learned about the trend line. Then we have also learned about the moving average today. And like I told you, I actually focus more on the three, the yellow, the black, and the red, the 50, the 100, and the 200. The 20 is just there in case sometimes I'm not yet confidently I'm not yet confident about that, what that trade is giving me in 1 hour. I want to see what could be happening in 15 minutes. And then that is where I can able to use the 20 because the 20 works better in in the lower time frame. Now, the 200. Now, sometimes you open your chart and then you discover that the price was once above the moving averages, is above the 50, is above the 20, is above the 100, is above the 200. The momentum is very high. Then suddenly you start see the price crashing down in a bullish situation. Whatever I'm talking about, if it is in a bullish situation, just try to think about it in the inverse. That means in the opposite. And then price start crashing down. And then the price crosses the 20, crosses the 50, crosses the 100. Something happens when it gets to the 200. Even if it's going to cross the 200, it will always, most of the time, bounce from the 200 and rest for a while. And then use the 200 as the major and big support for a comeback. Now, I want you to check something and take note of this. The moment it crosses the 200, and that candlestick closes as a bearish candlestick below the 200, I can guarantee you 80% that the market has changed structure, is going further to the downside. Let me repeat that and explain again. Price was in a high momentum. You are looking at your 1 hour time frame, you are looking at your 4 hours time frame. Price was in a higher momentum. It was above all the moving averages. And then suddenly you see price start coming down, even though you are not in the trade. You see price start coming down. It's crossing the 20, crosses the 50, crosses the 100. It gets to the 200, and then it waits a little. You want to, because that place is a very strong support. And then the price refused to bounce. And then it crosses the 200. And the candlestick closes as a bearish candlestick. You know, once price start dropping, you will be seeing red candlestick. Red candlestick. That's the bearish candlestick. It start coming. The bearish candlestick start coming. And it crosses the bearish the 200 moving average, the red one. And it closes below it. I'm telling you, if you enter a sell, 75% chances that you are going to have some good profit is there. And you place your stop loss above the moving average. You know, price is now below the moving average. It's closing below the moving average. And now price is closing below it. Then you are entering that sell. Your stop loss is above the moving average. Let's see if we can see something like that, where price was in the bullish momentum and then suddenly, aha, look at it here. It was in a bullish momentum. Look at it here. Bullish momentum. And then suddenly it crosses the red. And here is closing below it. See what it's doing. It changed structure immediately. And then price started going down. So what I was trying to say is that if you enter yourself somewhere here, let's say it closes and you are entering yourself somewhere here, your stop loss is above the moving average or above the candlestick, either of the two, above the moving average or above the candlestick. Look at the opportunity to the downside. See the opportunity, 5% in 1 or 2 days. That often happen. That often happen almost all the time. Almost all the time. Almost all the time. Almost all the time. The same thing is when the price has been in a bearish momentum, price is below the moving averages, is below the moving averages, and then suddenly it crosses. Now it crossed here and then it failed. Yeah, stop loss, no problem. One of my losing trade. Let's say you enter this kind of a trade, you hit your stop loss, but look at, it still came back to do it here. Not all setup will work, but most will work if you learn it correctly. Bam! My stop loss here. Look at it. Even if I'm targeting 2%, I have it. So that is how I use the 200, specifically the 200. The 200, because the 200 moving average is a very strong level. Price was previously trending higher, the moment was higher, then suddenly it started crashing. Crosses the 50, crosses the 100, crosses the 200, and the price closed at 200. I'm picking that trade straight away, and my stop loss is above it, 1% stop loss. Minimum take profit is 2%, 2.53%. And boom, that's an opportunity to get something. And if you know how to actually follow up with trades very well, couple with your trend line, couple with Fibonacci retracement, which we'll be talking about tomorrow. On Monday. On Monday, we'll talk about Fibonacci retracement. On Tuesday, we talk about, not Monday, Tuesday, next week, Tuesday, we talk about Fibonacci retracement. Then Wednesday, we'll talk about candlestick pattern, and then we end it with chart pattern. And then I'll now talk about trading psychology.